I came to inspect the mining operations of a name that I recommended to my subscribers on the 8th of February. DIG is the symbol, and this is a company that will have every one of their coins backed by $1 in gold bullion, so that will be a floor price for the coin. They also, by this time next year, will have 65,000 rigs up and running, spread out across 3 locations in the United States and Canada. I came down to Atlanta to inspect the operation in Atlanta, where there are 5,500 rigs right now. When someone tells you that they have a coin that will be backed by $1 in gold bullion and it's trading a lot less than $1, if they're telling the truth, you have hundreds of % of upside. And although I haven't gotten everything that I needed in order to be able to fully endorse this, I've already been working on this for almost a year. I've met with 6 of the executives in person. And if my subscribers were to wait until I have everything concrete evidence in front of me, the price will be a lot higher by then. It's already jumped 600% since the 8th of February. And the main reason I don't have everything that I need as an analyst to put my stamp of approval on this 100% is because they have their hands tied behind their backs with non-disclosure and confidentiality agreements that they signed with publicly traded companies and foreign governments like Bermuda. The Premier of Bermuda actually tweeted about this a few days ago, and the reason we are here today is I also wanted to give a chance for my subscribers to meet me in person. So we have a meet and greet scheduled today and then another one tomorrow, and I'm expecting 20 or 30 people here. Because most cryptocurrencies don't have anything backing them. So this gives them an advantage over a name that has no backing. So you have a coin here that has an underlying value, which would be a floor price. Whereas a lot of the cryptocurrencies today that are valued at hundreds of millions of dollars or billions of dollars are priced purely on speculative value. And if they don't show a utility value in the next 6, 12, 18 months to justify and validate the speculative value that's built into the coin price today, the price of the coins will collapse. This is what happened to Amazon 5, 10 years ago. There was a high speculative value built into their share price, even though they were losing money on every book that they sold. But they ended up justifying and validating that speculative value that was built into the price of the stock a few years ago. And anybody that bought that at $40 15 years ago is now sitting on a $1,600 share price. So you turn $25,000 into $1 million with a 40x return on your investment. And I think there's a 50-50 shot that the Bitcoin price chart 15 years from now will look like the Amazon price. Is very conservative with price targets, because if I tell people where I really think something is going, they will ignore my request to be diversified. If I tell if I tell my subscribers that I think something is going up 1,000 or 2,000%, they may take a bet that they can't afford to lose, and I don't want that on my conscience. There are no slam dunks in the stock market, and certainly not in crypto. You know, you could have a defection from one of the high-level executives. There could be execution risk. A new competitor could come in. You could have regulatory issues. Act of God, right? Where a couple of people on the board, God forbid something happens to them. So I never want anyone to put more than 5 to 10% of their money in any one name that I recommend. And one way that I can prevent that from happening is by lowering the price target to a level that people will not get ecstatic over. So it's more an issue of me trying to be responsible. Usually I tell people not to put more than 2 to 4% of their money in any stock recommendation or crypto recommendation. But if you only have $10,000 in the bank, you're not going to listen to me. You're going to put 10 or 20% of your money into a name if I'm endorsing it the way that I did. I already wrote a 35-page report on this name, And I just was in the right place at the right time. It took 20 years for something like this to end up in my lap. And I think I was due for something like this. I'm used to having names in the stock market, and in the stock market, if something goes up 100% in 5 years, that's a home run. So this was, I've actually hit a few names like this in the last year in cryptocurrency. A bunch of my names went up by 300, 400, 500%, but those were names that were in the top 20 on CoinMarketCap. This is one that I came up with that was off everyone's radar completely up until a few months ago. There's $200 trillion right now tied up in cash, stocks, bonds, and gold. And all four of those are overvalued around the world, $200 trillion. In my view, if 2% of that $200 trillion ends up in crypto, you're looking at a $4 trillion valuation, 12 times where we are today. If Bitcoin held on to its current market share, the price would hit $100,000. That's the bull case scenario. We ran up to $20,000 in January on Bitcoin, and the total crypto market cap hit $830 billion. And the last 5 months was a nasty correction. We went from $830 billion down to $350 billion. That's almost 60% correction. And Bitcoin has also dropped by around 65% during that time. It went from 20,000 down to 7,500, which is 62, 63%. And nothing goes up or down in a straight line. Anyone that follows the stock market or cryptos knows that this is a normal correction. You also have to take into consideration that the prices are manipulated, okay? If you have $2-3 billion in your account, you're a multi-billionaire. You want to be diversified just like everyone else. Let's say you want 10% of your $3 billion in Bitcoin. So you want to build a $300 million position for yourself. You don't want to pay $20,000 for a Bitcoin. So what do? You dump 30, 40, $50 million worth of Bitcoin on the market. It creates selling pressure. The technical analyst sell signals kick in. Then the market panics and capitulates. As the market is capitulating, as it did in March, you quietly come back in as everyone is panicking and you buy back 5 times what you sold for pennies on the dollar. And the smaller the names are, the easier they are to manipulate. And I was convinced that they were being manipulated. So not only did I post screenshots of my DIG purchases on Twitter, I also posted screenshots of my Bitcoin purchases back in March when it came down hard. It just smelled like a fish, okay? And the same people that were selling Bitcoin in March at $19,000, $18,000, $17,000 were the same people that were buying it at $6,000, $7,000, $8,000 on the way up when we had the rebound last month. So the bottom line is that the individuals need to understand that they are in a boxing ring with someone who is twice their size. And they really need to know what they're doing. Otherwise, they will get eaten up alive and shaken out of what may be an opportunity of a lifetime. Well, everyone is different. You have 80-year-old people that are retired and don't need an extra boost in their portfolio. You have 20, 30-year-old people that are willing to take some risk. I had someone call me from India a few months ago. He had 1/10 of a Bitcoin. He says, Ronnie, my 1/10 of a Bitcoin is worth $1,000 right now. Bitcoin was at $10,000. He says, if this hits 100,000, like you think may happen in the next few years, my 1/10 of a Bitcoin is going to be worth $10,000, and I will be able to lift my entire family above the poverty line with that money. So everyone has to decide how much risk they want to take. In life, you miss every shot that you don't take. That's a basketball analogy. Michael Jordan missed half of his shots, okay? You miss every shot that you don't take. In my view, this is a shot worth taking. If you missed Amazon 20 years ago, this is your second shot. And I always ask people, what would be more painful? To take a shot and miss it and lose a few months of your salary? Or to sit on the sidelines and kick yourself 15 years from now if the bull case scenario plays out? Every one of the 600 recommendations that I put out was time-stamped intraday by at least 3 different news wires, including Briefing.com, Bloomberg, and Dow Jones. People have to be careful when they listen to these talking heads on Twitter. Most of them have tens of thousands of followers, but none of them have an audited track record. And you have to really be careful who you listen to, because a lot of people may just be pumping and dumping names that are in their own portfolio. Yes, I would hold on to it. And if you have money that you can afford to lose, you might want to double down. And then you're dropping your average cost per Bitcoin from $14,000 to $11,000. If you bought one at 14 and another one at 8, your average cost per Bitcoin is $11,000. And it'll be a lot easier to get back to break even with an $11,000 break even point than it would be to get back to 14. My target looking out to the end of next year is still $28,000.